with Box because they are one of your competitors, and we are seeing signs that maybe they're struggling to get to market.
Yep.
What's your take on why this is happening?
Well, I think on one hand, they're like us in a huge market. The market's growing fast. There's a lot of excitement about that market. Like some of the companies out there that we've seen in the public markets already, they're spending a lot to drive growth.
Right.
And
they're spending a ton on marketing.
Yeah, I think, marketing, and I mean, they're burning about $17 million a month. For us, they burn more in a few months than we have in our entire history of the company over 10 years. So it's a very different approach to the market. It's not to say what they're doing is right or wrong, it's very different. And I think we're seeing public companies that were spending a lot to drive growth get a little bit of a reset. I mean, I think it's fair to say we are in a mini correction. I don't think we're in a massive correction, but we're in a mini correction where these companies that are losing a lot of money to drive growth, they're being reset. And you've seen FireEye come way down. And I think Box is one of those companies. But Box is, a company growing quickly, lots of great customers. I think they'll be able to raise capital. It's just they had raised so much capital at such high prices that it set that expectation bar really high.
So it's a mini correction, not a bubble.
I don't think it's a full bubble in the context of having lived here in 99, 2000, but I do think there are companies in a bubble state. There are companies trading at very lofty expectations. And when the hype cycle of Silicon Valley gets ahead of reality, eventually that comes into equilibrium. And for companies over the last 5 years like Groupon and Zynga, that happened in the public markets, and that's painful. And I think it still happens today where companies, the hype cycle gets so far ahead of reality, eventually it comes into equilibrium. And we're seeing that happen for some companies today.
You mentioned FireEye. FireEye down 37% year to date. Twitter down 48% year to date. You're seeing employees sell their shares with a lockup expiration. Is that even worse because it's insiders?
Well, I mean, I think there's all kinds of reasons why insiders would sell, right? If you haven't made any money and you're 29 years old and
I understand that.
You want to get some liquidity. I think it goes back to that the hype got way ahead of reality. And if you took a line and drew it from when someone joined Twitter 4 years ago to its valuation today at, call it $20 billion, that's a massive win. If in between there it went to 40 billion and back to 20, that hurts. That doesn't feel quite as good.
So how do you see this playing out?
Well, I mean,
how bad is it going to get?
Well, I don't think it's going to get that bad. I called it a mini correction because I think you still have massive new markets. There's transformative things happening in how technology works by virtue of moving computing to the cloud, moving storage to the cloud. And so you have great new businesses being created. And over time, I think that moderates. I think there's some companies that got ahead of themselves. There's a lot of companies that are, I think, very inexpensive, though.
But you're seeing also companies get bought for massive valuations, which is not just the public markets. I mean, WhatsApp, Oculus Virtual Reality, Beats potentially getting bought by Apple for $3.2 billion. What do you think of that?
Yeah. Well, I mean, I think the Oculus and WhatsApp, they were using a lot of, so some of that was currency valued very highly in Facebook stock. But, they're making bets on what the future is going to hold. And I think, Zuckerberg is very focused on making sure that Facebook, rides the future waves and not just the wave it has already ridden. So I think, we can argue about the valuations, but they're interesting bets for them. Clearly very high prices. I think I understand WhatsApp better than I understand Oculus, but that might be by virtue of who I am and what I do.
What about Apple buying Beats? I mean, there's all this discussion that innovation is dead there. They're out of ideas. Would you be writing a peanut butter manifesto if you worked at Apple?
I don't know enough about Apple. I mean, in the Silicon Valley kind of ecosystems, Apple kind of is a little bit insular and, very confidential about what's going on there. So I think it's an interesting bet, and certainly by virtue of the fact that it's their biggest acquisition ever. Given their balance sheet, given their ability to make acquisitions, I actually think it's an interesting bet. And I think I would be surprised to see more of that going forward. I don't think it's a sign that there's not innovation happening internally. I just think it's an opportunity to, add new businesses and probably be very accretive to the business.
So how's the peanut butter being spread at Hightail? I know you guys are expanding internationally. We've talked about cloud storage companies. Obviously, Box is spending a lot on marketing. You guys don't do that. Dropbox really doesn't do that either. What's your differentiator?
Well, we have definitely tried not to spread the peanut butter and be very focused about who we're going after. And we're very focused on professional use case. And then investing particularly around controlling how you share content in the cloud. So giving you the ability to track something. If I share something with Emily, I can see I get a read receipt. I can password protect that. We see a spike of activity around QuickBooks and the tax day. So around April 15th, you see a lot of people, they need to share lots of data with their accountants, their tax person. They don't want to put that in Dropbox where there's risks about security, risks about how it's being shared. And instead, they put it into Hightail, and we see a lot of accounting activity around that time period as an example.
So what's next?
For us, international has been an important component. Just back from Australia yesterday, we just opened our office down there. I've got 120 corporate customers down there already, almost a million active users. So it's exciting to see Australia adopt cloud-based technologies, I think, pretty rapidly. We're going to continue to invest in how do we be differentiated around control, around tracking for that professional use case.